Good evening. You're watching a very special telecast right here on ET Now. Well, the big milestone has been achieved by India's most valued company by market capitalization, Reliance Industries. It has turned net debt-free much ahead of schedule of 31st March 2021. They've achieved this feat right in the middle of lockdown here in June 2020. In fact, not only that, the street has been quite rewarding towards Reliance Industries, and the market cap has edged to $150 billion in total. And in this last 2 weeks since the March lows, the market cap has almost doubled. So clearly, a promise which Mukesh Ambani, chairman of Reliance Industries, made in August of 2019 to its shareholders has been fulfilled much ahead of the schedule. So to discuss that, and of course what exactly does it really mean for Reliance Industries to have become net debt free, the big value creator, the technology telecom kind of geo platform which the market is looking at it, what exactly is this company and what's happening there that world's best investors, sovereign wealth funds are lining up, queuing up to have a pie of that along with private equity companies. We have got two very special guests on the show. I've got Ayon Mukhopadhyay. He is joining us right now on the phone line from London. He looks after India Infoline's European operations and interacts with marquee investors all the time. And he'll help us understand what's exactly exciting all these blue-blooded investors into Reliance Industries. Nitin Soni joining us on the phone line out of Singapore. Nitin, of course, understands technology and telecom very closely and will help us analyze the business model of geo platforms and the way the cash flows are likely to be from here on. Nitin, let me come to you first. Geo platforms have established a market value of around 5 lakh crore. Bulk of the deals have happened around that particular number. How do you see the business, the way it has grown, and the environment telecom is in right now as far as Indian operating scheme of things is concerned?
So thanks, Ajay, for having me on the show. I think, first of all, let's talk about the telecom industry in India. I think we have come a long way from, we used to have 10 to 13 industry participants with cutthroat competition. And since Jio's commercial launch in September 2016, industry has rapidly consolidated. We now have only 3 private players and 1 government-owned player. And soon we are likely that we are going to head towards a private duopoly if Vodafone Idea doesn't get the equity to pay the AGR dues. So right now the industry environment is much, much better than the previous decades we have seen. Tariffs are rising. The industry tariff, which bottomed out at INR 100 rupees, they have now increased about 50% for Bharti at least. And we will see that in the coming quarters, Jio will also report higher ARPUs as some of their longer tenure customers renew their price plans. As far as Jio is concerned, they definitely have a different vision than a plain vanilla telecom company we see. They are going into different technologies. They have invited large investments from marquee names across the world. And this investment will help them to fund some of their technology platforms. I think we still yet to see what kind of technologies and what kind of businesses the Jio will enter in. But I think it's safe to say that with the Facebook investment, Jio platform is going to integrate the Jio platform application with WhatsApp. And by integrating all these kirana shops and small and medium-term enterprises, they are going to provide goods and services in a big way to the large consumers of India. They are also going to compete on the e-commerce against all the likes of Walmart and other e-commerce companies in India. They are also going to compete in the markets where Paytm is now operating. So unlike other telecom companies which earns their revenue by providing telecom services, whether it's mobile or fixed broadband, I think Jio is heading towards much multidisciplinary market segments where not only telecom, they are also going to be a big investor in startups. They are going to provide financial technology services, whether it's a WhatsApp or whether it's kind of a geo wallet services or connecting the kirana shops and connecting the mass consumers. So I think they have a broader vision. They have a larger addressable market than a plain vanilla telecom company would have.
Right. Right. We'll take that point forward, Nitin, in just a moment. Let's also get in Ayon, who is joining us from London. Ayon, you've interacted with some of the marqueest investors around in your territory, in your own backyard. The quality of investors which have come in this transaction, that too in the middle of a global lockdown, what a combination of three sovereign wealth funds, three marqueest private equity companies. Then there is the technology behemoth Facebook itself. Out of your experience, what do you think would have excited this class of investors, one after the other, in geo platforms?
Yeah, hi viewers. Good afternoon. Well, I think keeping aside the global issues and the coronavirus issues and stuff, I think over the long term, this, as the earlier guest has explained, geo platforms or Geo, for example, was not really perceived as a telecom company, but all these investors were actually looking at Geo as a way to play the next wave of technology innovations in India. And when you look at it, the last 10 years has been the smartphone revolution in India, and what the next 10 years would be the digitalization, the rapid growth of digital platforms and stuff in India. So when they were looking at it, and with the rapid development that Reliance has done in growing into the telecom company they did with the market share gains that they did, and the platform that they had, so these investors probably figured out that this is the time that to get in. And one after the other, they got in. And one thing also we have to realize is that the private equity investors in the world are always looking at opportunities. So they were flush with liquidity at that particular point of time. Given the corona crisis, opportunities also were not that high, or rather, the opportunity is not that in every sector. So this was something that they looked in India. It appealed to them, and the market started coming in. One very, very important thing about Reliance right now is that most technology companies in the world, if you look at the FANGs that we and this, it's been used in a very cliched way that Reliance is a FANG play in India, and that is why it is very, very important to stress this point. Most of digital companies in the world, if you look at the world of Amazon and the Apples and all, are all cash-rich companies, or rather they are debt-free companies. So this particular point that Reliance has been able to get debt-free is very, very important, and a very, very important milestone that we should be we should highlight.
Ayon, one quick follow-up. With $150 billion in market cap, 60th biggest market cap company in the world, and the way the juggernaut is rolling, it will also bound to have overall support for the market, because the weight of Reliance Industries in the benchmarks is also going higher. So if the way there are big triggers lined up ahead, even from here on, earnings profile of the company continues to grow from here on, it is bound to have a positive impact for the overall benchmarks as well, is it not?
Have to be. And you know what, you did mention in the beginning of the show that the stock has doubled in the last few weeks or so. That's, I think, slightly misleading in a way, in the sense that the stock did correct a lot also, and then it bounced off. So if you look at the highs from which the stock was in February, the stock is only about 15% or so up. So in a way, the stock really has not gone really ballistic, in that sense. So if we take the point from which the stock was in February, the point which the stock is now, it's only 15% up. So but the stock has completely become debt-free from what it was in February till now. And at that point of time, no one could really have predicted the stock to be debt-free. Of course, the corona issue came and it's still there. We can all argue that, but really Reliance is not a stock that we're going to be debating with the corona issue. So in that case, you can say that the stock has a huge way to go. And And in that way, it is 15% of the market right now. Lots and lots of funds will have to keep buying this stock, and that should propel the market. And there is also now questions coming whether the stock will split. Probably eventually it will, and it will split as it list as different companies, and that itself will bring more investors into it. So yes, so I would definitely be sanguine on it, and I would definitely say that the runway to growth is still not done, and there is a clear pathway right now.
Sure. No, I must say that what I meant was that from the depths of the correction, it has doubled and it has become net debt free. It does have some residual debt on its books, and as some of the analysts we've spoken to through the day also say that pure debt free perhaps may not be a great thing, but it should be net debt free. Some residual debt is fine as long as the capital, the return on capital is very optimum. Let me come to Nitin. Nitin, the stock market may have started to look at Reliance Industries from a pure oil and gas major a couple of years back to a technology play now. But purely if one were to look at the cash flows, potential cash flows which a Jio platform is likely to generate over the coming years when it grows from just a mobility-led business model, which is right now, into other segments as well. What's the potential in your view, and how do you see that take place?
So see, if you look at Reliance today, for FY21, we forecast that 50% of the EBITDA, the cash flow from operations, will be coming from two segments, which is retail and telecom. And telecom, right now, the most of the revenue is coming from wireless services. And they have only recently launched the fixed broadband services. So, first of all, the next leg of growth in the mobile segment itself will be coming from the fixed broadband sector. And as we have talked before, fixed broadband is one of the very under-penetrated market in India. Bharti Airtel has only about 2.2 million homes in a large country like India, where the addressable homes market would be at least 250 to 300 million homes. So one is that they will have a significant growth from the fixed broadband market. And I think once they invest in the technology platforms and unleash the entire integration with with Facebook and integration with their retail arm, I think the next leg of growth will come from the e-commerce business. And I think it's important to draw a parallel with the Chinese companies here. I mean, if you look at some of these bigger Chinese technology companies, and we rate Tencent and Alibaba at A+ with a stable outlook, these companies, for example, Tencent has a huge market in gaming business in China, while Alibaba is in itself an ecosystem in the e-commerce business. And they make a lot of revenue and EBITDA generation from gaming and e-commerce business. So if you compare China with India, India is far behind in terms of the technology adoption, in terms of gaming revenue services, in terms of e-commerce businesses. We hardly have any profitable e-commerce company at the moment in the country, where if you look at Alibaba, the free cash flow margin is one of the highest in our technology portfolio, maybe except Samsung. So, the next leg of growth is going to come from e-commerce, from the financial technologies, and from, as people adopt more technology, there are different segments in the markets which will open up, whether it's wallet services or whether it's gaming. India has a long way to grow in terms of all these technology adoptions. We have only, right now, we have covered with the mobility services the entire country. And 4G penetration is only 50%. And we haven't even, done the spectrum auction for 5G. While if you compare to China, China has already done the 5G commercial launch. And 5G is already being launched by the China Telecom and China Mobile. So I think India is the last leg of, big country in the world where technology adoption in a mass way still has to happen. And, given the reach of and the distribution network of Reliance, I think, the company will obviously try to capture all these technology-related markets.
All right, Nitin Soni, thank you so much, as well as Ayon Mukhopadhyay, both of you taking time out for this very special analysis chat, which we had planned for our viewers today on Reliance Industries becoming the not only net debt-free as promised to the shareholders, but also $150 billion, 60th most valued company globally. So indeed, a milestone achieved by the company. Thank you very much, gentlemen. With that, I'll hand it over back to Karunya for more news and updates on the channel. Stay tuned.
Thanks, Ajay, for that. Let's stick with Reliance Industries for now. Jayesh, my colleague, is standing by with the details of Mukesh Ambani's net worth compared to that of the next 4 billionaires in India. He also has some more insights on how the landscape of the top 5 companies in the country has changed ever since the last AGM of Reliance happened back on August 12th, 2019. Take a look.
It was a historic day of trade, with Reliance Industries becoming India's first $150 billion company by market cap. Not only that, Mr. Mukesh Ambani now has net worth of $60 billion, which is more than the combined net worth of the next 4 billionaires in India, which is Azim Premji, Gautam Adani, Shiv Nadar, as well as Mr. Radhakrishnan Damani. All 4 of them have a combined net worth of more than $55 billion as compared to Mukesh Ambani, who has net worth of more than $60 billion. Let's also have a look at how the landscape of the top 5 companies in India has changed ever since the last AGM of Reliance that was held on 12th of August 2019. Back then, Reliance was the second largest company in India, but that has now changed with Reliance hitting $150 billion of market cap, followed by TCS, which is at $100 billion, and you have HDFC Bank, HDFC as well as HUL making it into that list, but quite a distance away.